The Australian dollar strengthened early in the week, but fell just short of 75 cents, and on Wednesday fell below 74 cents as the US dollar strengthened. Commodity prices have been extremely volatile lately, but overall are still broadly supportive of the Australian dollar, holding around at levels that we haven't seen since May 2014. This is likely to remain a support for the Aussie near term. But while commodity prices are always important for the Australian dollar, the biggest move this week was the 1 cent fall on Wednesday as the US dollar surged, backed by higher bond yields. In fact, since the US election, US 10-year Treasury bond yields have risen 60 basis points to almost 2.5%. But the debate is likely to continue for some time over just how much higher US yields should be in anticipation of a Trump administration. There is ongoing debate over the scale and timing of any infrastructure spending. It's likely to be quite distant and potentially not something that bond markets should be reacting to very sharply at this stage. However, the incoming administration does look as though it will make a priority of large corporate tax cuts. So markets seem correct to be pricing in much wider budget deficits. Therefore, yields should be higher, but again, the question is how much higher? Australia's calendar in the week ahead is very busy. On Tuesday, the RBA is extremely likely to keep the cash rate at 1.5%, but as always, there'll be interest in the tone of the statement. The recent strength in house prices is likely to be noted by the RBA, but so too the weakness in the job market. Also, looking ahead to Wednesday's GDP report, the RBA is likely to be bracing itself for a soft reading. The private capital expenditure numbers that we saw this week were disappointing, and they have caused us to lower our GDP forecast from 0.4% to 0.2% on the quarter. That's 2.5% year over year. Understandably, with growth so close to zero, there is discussion over whether GDP might actually contract in the quarter. However, we think a negative reading on GDP is quite unlikely. And while the third quarter is surely going to be soft, on Thursday we will see an early reading on the fourth quarter with October trade numbers. These are likely to see a further narrowing in Australia's trade deficit, with exports firmly on the rise, boosted by higher commodity prices. Internationally, in the week ahead, the US calendar is fairly quiet, but Europe will have a lot to watch in terms of the Italian referendum results and the European Central Bank meeting on Thursday, which is keenly anticipated. All of this is likely to leave the Australian dollar in the 73 to 75 cent range that we suggested last week and which has held. Looking a little bit further ahead, the Aussie dollar is likely to break those ranges to the top side after the Federal Reserve meeting on interest rates on the 14th of December. We'll speak to you next week.